Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about, is Tesla stock dead? Now, we all know Tesla giving these crazy returns. You know, the 3-year chart's absolutely crazy. Lows here at $35, highs here up at $900. That's giving a return of well over 2,400%. So definitely outperforming all of the indexes, Dow Jones, the Nasdaq, and the S&P 500. And the thing about it is we've seen these absolute crazy returns for Tesla, but it almost seems like recently Tesla hasn't been doing much. You know, we had this sell-off, and actually the short-term trend of Tesla right now is down, right? But the long-term trend is still up. But short-term, we have a lot more sell-off compared to almost a year ago at this time. Why is that? Should you buy Tesla? Is there better opportunity elsewhere? So for me, it's all about understanding support and resistance. So let's actually go ahead and clear out some of these drawings just to make this a little more easier to see. Okay, so you guys can see once we have this, there is multiple resistance, right? The strongest resistance that Tesla has is 900. That's going to be the hardest for this thing to break above. The next strong support is near and around pretty much $800, about $780. So you guys can see it hits it several times. We get sell off, and there is more resistance near $716. Okay, so it hits it. We hit it several times, and every time we have a lot of sell off. And now that we know where the resistance is what's the support for this? So do you guys see this yellow line here? This yellow line represents the 200 moving average line. So it takes the previous day closing prices, the past 200 days, merges them together to form this line. The reason why we have this line is because you guys can look at it, instantly know the overall trend of Tesla, and when the stock is above it, like it is up in here, it has a tendency to use it as support. So it comes in contact almost once, twice, 3 times, 4 times, and every time we get buying pressure near and around that moving average line. So what is the best strategy for Tesla? Well, the thing about it is I think there is multiple swing trade opportunities as well as still as a long-term investment for this. So you guys can see that Tesla has this support here. So every time it comes in contact with it, you guys could hop into this, set your stops pretty much below $600 and ride the wave, right? Have this be a swing trade, okay? Because I still think there's a lot of opportunity for the short term for this. We just have to get the sell-off back down to the support line. But in the meantime, a fantastic strategy that I would recommend is a strategy called dollar cost averaging. So what you do is you pretty much figure out however much you want to invest in Tesla. So if you want to invest, let's just say $200 or $1,000, let's just say $1,000. So instead of putting up $1,000 all up front and have the stock be a little overvalued or something along those lines, and then we get sell off like we did back up in the $900 mark, what you do is you just dollar cost average it out. So you take $100 over the next 10 weeks. So you still invest the total principal of $1,000, but you spread it out into weekly, monthly increments. So you get a good average price for that time frame. So what this does is when we have these huge bull markets, you guys still make money because your share prices will go up. But the beauty of it is when you have a more volatile stock and it goes down, what you do is you just average into your position so you guys can get a good average share. So once it recovers, you guys will make a lot more money in the long term. This is what I'm doing with it just because I think that Tesla is so volatile and there's still so much risk behind it just because of the overall momentum we've seen in the past. A lot of people don't want to sell their positions, but Tesla really isn't doing much. You know, are they living up to their standards? A little bit. They have a high price to earnings, well over, 1,000 on the price to earnings. But I always have this mindset that growth stocks in general tend to be a little overvalued, a little more volatile, and you just have to have that long-term outlook. But the biggest thing, did we already miss the move of this? Did we already miss the massive surge in making the most money possible? I still think there is a very strong outlook. Is it going to be a return of 2,400%? probably in the long term, but in the short term, it's going to be volatile. It's going to be going up and down. We'll probably start seeing a little more buying pressure, start stepping behind it. My total outlook for this thing is to hit about $800 by mid next year. I think that's fair, just because if we look at Tesla's revenue, you guys can see Tesla's revenue has actually been doing very, very well, right? An increase of 89%. The previous one, 62%. The gross profit is increasing. So I think that we'll get a huge demand for this stock here. And right now, it's just the matter of living up to their standards of having these high numbers, and a little overvalued on the chart. So it's just been consolidating lately. But overall, I think you have to have that mindset that it's going to be a little bit of a long-term outlook and a little volatility before this thing goes up again. So that is it. I hope you guys enjoyed the episode. And if you did, hit that like button and subscribe, and we'll see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care.